two members. At this time, we need to, a motion to excuse Mr. Norris and Commissioner Commissioner Barfield.
So moved.
Second.
All in favor?
Aye.
Aye.
Next, we need a motion to adopt the agenda for today.
So moved. Second.
All in favor?
Aye.
Next, approval of our minutes from our last meeting. Mr. Hackney.
Minutes are in June packet, and a motion to approve.
Second.
All in favor?
Aye.
Next, Donna, any public speakers for today?
No, sir.
Thank you. Next item is our consent agenda. There are 8 items before you for consideration. Take any questions, comments, Mr. O'Grady?
I have a question on number 7. I actually don't have a problem with the item itself, but this was our pretty significant investment we made going up to 421. And I just at some point would like to hear, who's hooked up, what's the return that we're getting on that
Okay.
at some point, because there were promises that there were going to be a lot of connections, and I don't know where we stand on that.
Do you want us to
Not today.
follow up on that item?
Yeah, I'll
Okay,
follow up.
that's fine.
I did drive up there this weekend, and there was stuff under construction everywhere. So
Yeah,
I'm assuming that they're new customers, yes, because there was all kinds of construction going on right up through there.
It would be good to know, it would be good to let the ratepayers know that there's a return on this.
right.
The one thing that I gleaned from it, I was at a meeting with Carl, and there were some developers that were looking at developing along there, and I didn't know, but I think we had bored every 1,000 feet under the road.
We had brought strategic locations
Yeah.
along the entire
And
board.
that moves projects along and saves a lot of money. That's already done. So, I thought that was pretty neat.
Which in that meeting, the forethought to do that was key in that meeting.
Exactly.
And I will say this item, which is on the northern end of those improvements, that area is now getting the activity and growth that we had thought was going to happen at some time, but it's a little bit accelerated from the original plan. So that it's doing really well.
It'd be good, I just think it's good to
Yeah.
just let the ratepayers know
Right.
that it's paying off.
Good. We can put something together on that. Any other questions or comments on the 8 consent agenda items or a motion to approve?
I would move the consent agenda for approval.
Second.
All in favor?
Aye.
Thank you. Moving on to new business administrative reports. Linda?
I do not have a report, but I do need to go into closed session for about 5 minutes to give advice to the board and seek direction on CFPUA versus trying to intervene in the lawsuit between DEQ and Comores and Duke Power.
Okay, we'll do that at the end of the meeting today. And now for his inaugural executive director's report, Mr. Waldrop.
Thank you, Mr. Chair. The key indicators, the environmental report, safety report, and this month we also have the quarterly CIP report are all in your packet, beginning on page 42 through page 43. Staff and I stand ready to discuss any of these items. It's your pleasure.
Mr. Chair, it's Rob. Can you hear me all right?
Yes, and
yes.
we can see you
Way too good.
quite clearly.
Mr. Chair, I had a couple of questions about the key indicators report, if that's appropriate at this time.
Yes, sir. Proceed.
Great. First off, Ken, thanks very much for continuing forward with this. I think it's a really important and really handy device to have on a monthly basis. The first is on the development services on page 11 of the key indicators. It's showing that permits reviewed at 260, which is a 35% increase over June of 2020. I just think that there's a whole lot of positive things about certainly our entire region, but what CFPUA is doing and for our building trades as well. That's the canary in the coal mine kind of things in a positive way. The second point is on page 10, the turnover and vacancy rate. In June of 2021, we had a 0% turnover rate. That's fantastic when you consider that we just did a major changeover, with our leadership here at CFPUA, and to have a zero turnover rate, that says, to me, it says volumes of what we're doing as an organization, and that's just fantastic. Hey, good morning, Jonathan. Good to see you.
Good morning, Rob.
Moving on under the environmental performance chart, the Sweeney raw water flow versus treated water. I was curious as to why we don't have June totals. We're still dealing with May totals, and we're seeing a steady increase of total raw water usage or flow since December of 2020. From 14.5 million gallons a day to 20.5 million gallons a day. Is that an issue, or is that seasonal? Is that typical? Any thoughts on that, Ken or Carl or anyone there in the room?
Carl, would you please speak to that? Thank you.
Thank you, Mr. Zappel. The raw water versus filtered water flow trends, that's obviously something we keep very close track of. Our raw water comes from both our own pump station as well as the Lower Cape Fear pump station, and it's just matching up with what our demand is. So any increases that we see in raw water flow is obviously related to additional water that we're delivering to our customers.
So we're seeing it, Carl, we're seeing a steady increase. Do we see, again, is this seasonal? Will it top out? Or are we seeing a trend now that extends back to December of 2020?
It's primarily seasonally driven, with the lower flows being in the winter months, and then we're peaking in the summer months. For this summer, May has been our highest month so far. June is not on this chart, but I can tell you that June did drop off a little bit when the rain came. If you recall, in May it was very dry. It was hot, and we did issue a voluntary water conservation, just like Brunswick County did. But overall, we managed our production.
I see. Okay. Thanks, Carl. And is there a reason why we're a month behind on the reporting of Sweeney volumes? Where we have Mays now, is it just what's the hang up of that getting? We seem to be far behind.
I think it was a timing issue, perhaps, on getting the report together for publication, but we can get that catch up next month.
All right. Thank you very much. I guess maybe, Carl, are you there? On the CIP report, number 22, it responds to the Sweeney GAC replacements. I'm assuming because of that cost, I think it was around $2 million. That's for the existing GAC. The investment that we're making in the new GAC filter building, is that part of the Sweeney enhancement number, that $51 million? I just didn't see the big number called out there under the CIP. Could you clarify that?
Sure. Well, you're absolutely correct, Commissioner Zappel. The item 22 on the second page is for our routine annual replacement of the GAC media in the existing filters that we have been doing for a couple of years now to at least remove some of the PFAS compounds. On page 1, under the top projects, number 2, the Sweeney enhancement, that is the big project to build the new GAC filters for the overall PFAS treatment.
Mm-hmm. And Carl, as we move forward, we get the large GAC building completed. Will we continue to see, annual numbers for our existing maintenance at around $2 million? Will that increase? Will that decrease? Or do you have a feel for it yet?
So the $2 million that was in that for the routine replacement of our current filters will go away because we won't be doing that every year. However, that will be replaced by the GAC replacement, regeneration of the new GAC filters, which was estimated at about $2.9 million per year in our engineering report. Obviously, once we kind of get into that a year from now, we will update those costs.
Great. Thanks a lot, Carl. That's all I had, Mr. Chair. Thank you for your patience.
Thank you. Any other questions or comments? Moving on to the committee reports. Our executive committee met on July 7th. The minutes of that meeting are in your packet. Anybody have any comments? Otherwise, we'll move on to long-range planning. Mr. Sneeden.
Yes, the minutes of the June 24th meeting are in your packet. We are not having our regular long-range planning committee meeting this month, but we are, I think, gathering in the IT conference room tomorrow at 3 to 4:30 to, if desired, it's purely voluntary to see a webinar on stormwater harvesting and use of that water for water supply. So just, we didn't have business for the meeting, but we are having a chance to look at something for long-range planning tomorrow.
Thank you.
Who's been on the weather? Yeah. Okay.
I think it's water environment preservation.
Next, Finance Committee, Ms. Adams.
So the minutes from last week's Finance Committee meeting are in your packet, and we've got a regular monthly financials update. Thank
you. See if I can get used to this. Good morning. Okay, just very briefly walking through our performance of our revenues compared to our expenditures. This is through May 31st, so 11 months through the fiscal year. And you can see on the operating side, if I can figure this laser out, our revenues have exceeded our expenditures by $1.4 million. So, we have a surplus so far through May. We're getting pretty late in the year and anticipating a slight surplus on the operating side. This is the time of year where we start to look at our options as far as how to use those surplus funds. We adopted that one-time revenue policy a number of years ago where we can use those funds for certain things, to pay down debt early, to realize interest savings for ratepayers, and also we can also park those funds in a capital reserve to offset debt that we otherwise would have issued. So both of those things are kind of geared towards savings for ratepayers, and so we will be exploring those options and making a recommendation. That normally comes after the audit is done, and we make that recommendation in November. So in terms of our fund balance, our target is the $50 million, and we're right here at about 60.5, so looking good there. Going to our, just a snapshot of our revenues and how those are performing. They're performing well, and very, very close to where we budgeted them overall. We have obviously some differences kind of across the board. Our investment earnings are way down compared to what we put in the budget. But we're seeing some outperformance on the water side, specifically in terms of our consumption per ERU. That's ahead of where we kind of factored it in the budget, and the same is true on the wastewater side. We're a little behind in terms of the ERUs that we've billed compared to where we budgeted them. And just kind of something to maybe give some context for how these things line up with those revenue drivers that we baked into the FY22 budget. So looking at the ERUs, okay, We budgeted 94, just over 94,000 for FY22. So hoping on a growth of around 2,000 ERUs on the water side, and on the wastewater side, budgeted about 90,500. So looking for similar growth on the wastewater side in terms of ERUs. And as far as the usage, the billed usage per ERU, the billed usage for FY22 was 62,255, which is slightly below what we have actually seen in FY21, but very, very close. And we're slightly, I think, on the wastewater side, 56,702. So we're slightly above, about 200 gallons above this number is what we factored into the FY22 budget. So just wanted to kind of give some context on how those things kind of compare to what we've actually seen in FY21.
Quick question for you. On your previous page, what are the other revenues?
Sure. So the other revenues right here, that'll be a number of things. Looking at the different kind of auxiliary fees that we charge. Reconnect fees, late fees, when we were putting those in there, were factored into there. Christie, inspection fees. There's a number of them. Some miscellaneous like rent, tower rent that we charge to people that put their equipment on top of our towers. Also included in this number, if you'll remember, it was about $1.9 million or so that we received from that settlement for the alum. That is also reflected in that other revenue number as well.
And the investments, why are they as low as they are?
Yeah, so we really saw kind of a crash in terms of interest rates over this past year with COVID. And so the normal way for us to estimate those investment earnings is we kind of take a projection of our investable resources that we'll have during the year and come up with some kind of interest rate factor that we're able to earn. It's never a lot, right? We're restricted to investing in treasuries and low yielding fixed income type things. But we're earning on our investments right now about at the North Carolina Capital Management Trust 0.01%, 1 basis point. So that's literally zero. So it just crashed this year.
So I guess you have no other options but that limited place to invest.
That's right. That's right. We do have the option to invest in some commercial paper, and we are invested in some of those things. This is a good question. We have a breakdown of all of those investments here. Oop, went a little too far. And you can see what those yields are. Now, these things were purchased, a while ago, and they're rolling off. But you can see that we have some things, let's see, that are, 2.46%. Now, that was an investment of about $1 million, 2.49%. But these things are slowly rolling off in the things that we're purchasing. So certificates of deposits, that's a big thing that we invest in. Those are around 0.4%. And you can see our, let's see if the North Carolina Capital Management Trust is there. Yeah, a basis point is what we're earning. And that's where most of our money is. The bond funds are required to be there. The amounts that we set aside to pay debt service are required to be there. And so what we're kind of doing right now, we could invest this $22 million right here that's sitting out there. But the alternatives right now, we're looking at a 3-year treasury or a 5-year treasury that's yielding like 0.2%. Well, does that really make sense to lock up our money for 2 years, 3 years, whatever it may be, when we're earning 2%? Hey, let's maybe stick around a little longer, see what interest rates do. Maybe they pick up in the short to mid term, and then we can deploy that excess cash right there. So it's something that we do look at regularly.
Do you have a firm that manages these investments, or is it
We contract with, so we manage it ourselves. We kind of invest according to a program that our financial advisors, Davenport and Company, they kind of walk us through our options and that whole process. Any other questions? Thank you.
Thanks, John.
That's it for finance.
All right. Any old business to discuss? Have any closing comments before we go into closed session? I'd just like to say welcome, Mr. Waldrop. Your first board meeting. You survived. So we look forward to working with you and tackling some of these things and continuing the good work that everybody here does. So.
I want to make a comment that we did have a great commission meeting yesterday as we honored Jim Fleckner. I think he was very surprised with the acknowledgement from the governor's office. And it was just great to see some of the board members there. And of course, our new director was there as well. And the mayor also acknowledged him as well from the city standpoint.
Great. With that, there's other comments. We take a motion to go into closed session.
To discuss those lawsuits that we mentioned earlier.
Second. All in favor?
Aye.
Thank you.
You brought up birthday, huh? Oh, it's good stuff. I'll try to get there. You look half-assed.
Two things to sign.
You look half-assed yourself.
And then Ken will speak up, but I'd like to do it
Yeah.
in technical session.
Follow your lead.
Yeah. Make sure, we'll wait till.
Always
the
enjoy
next-
chatting with you, Brian.
This is more, when we're doing the Bob coming in.
You can do that until there is,
Okay.
as long as there's a state of emergency.
Like
Now, because we can see Rob and all, under the law,
Oh,
if
I've
you
been trying.
all
Yeah.
do.
Before
Good
I
job.
started, I went back and
Been
watched.
on a high last.
Like, just to.
Say your name and your vote here.
I am
But
loving
because there are 11 of us, and Donna can see you all,
roll